Welcome to Tim and Julie Harris Superstar Interviews. We're joined today by Jonathan Smoke from Move.com to discuss the July housing report and the state of the recovering housing market. Smoke is a 20-year veteran of the real estate industry and recently became the first chief economist for Realtor.com. Today, we're going to learn about his role as the first chief economist for Realtor.com and what the market indicators are telling us about today's housing market. Now to your host, Tim Harris.
So, Jonathan, thank you for agreeing to be today's co-host. I really appreciate it. We've been looking forward to actually connecting with you guys at Move and introducing all of you, or I think in many cases reintroducing all of you to all of our listeners. So I'm curious, what's your background that led you into the real estate side of things? Because the chief economist role is new, correct?
It is entirely new, and thanks for having me, Tim. This is an exciting opportunity. I've got the looks for radio, so I think I'll shine in this session. Now, I have to be honest, I didn't choose real estate originally. I didn't wake up one day and say, I am destined to be a real estate economist. It chose me over time. When I think back, I'm naturally analytical, and so I was attracted to economics in college as a way to understand the world and why things happen. And I think, people probably can relate to that if they've read Freakonomics or have seen things like Moneyball, that you can make meaning out of life with some good data and some good statistical programs. But to tell you how much of an intellectual geek I am, I actually double majored in economics and religious studies. That's how much I wanted to find meaning in life, and I figured between those two ends of the spectrum, I would have it covered. But I also really enjoy the communication part of things, and I've really found that over the last several years of acting as an economist and really going out across the country and talking to realtors, builders, remodelers, and really just being out with people, I learned that I actually enjoy the communication part of this and telling stories and making sense of what's going on. I've landed here in what I would say is my dream job.
Well, congratulations for that. So of the three I know we have some questions that we're working off of, and hopefully I don't throw you off your game too much if we skip around a lot, because I know that our listeners are really focusing on specific topics. I'm going to jump to this question because I just think it's really interesting from your perspective. And I think everyone, we have, I don't know, it's hard to know for sure on a daily basis, but we have the largest audience of real estate agents looking to learn how to build their real estate businesses. And it's interesting from a coaching perspective, a lot of these guys are brand new in the business. So we get free coaching call requests frequently, free coaching calls for agents.com, and these agents are coming from professional backgrounds, executives in other companies, advanced educations. A real shift, I think, is happening right now in terms of the types of people that are becoming realtors. And so they don't necessarily understand the working relationship or the relationship between Realtor.com, Zillow, and Trulia. And so I'll give them an ultra-brief history and then a question. Realtor.com was the first to create the model, and Realtor.com, listeners, is owned by Move.com. So just to kind of clear the air, Trulia and Zillow really are not tied in any way to the industry. Move.com is associated very closely with the National Association of Realtors. So when you hear us talk about on this radio show buying buyer leads and Zillow and Trulia, and you guys are wondering where should we syndicate our listings if we're going to decide to syndicate one place or the other, where should we have our listings show up? We will always tell you to have your listings appear on Realtor.com. There's really two ways about that. And it's an interesting angle that Realtor.com, because of the fact they have a direct tie-in with the National Association of Realtors, Realtor.com really does have the most accurate listings data. Is that something you can talk a little bit about, how much of an advantage that is to realtors that, Realtor.com does offer really real-time listings data versus, say, some of the other syndicators?
Yeah, absolutely. So, our tagline today is accuracy matters, and I came on board right when that campaign was starting. So, of course, as an economist, I love that approach and being data-driven. So, Realtor.com covers virtually every listing in the U.S. We receive data from over 800 MLSs, and literally statistically, we are just about at 100% of all listings in the country. So you have that breadth of coverage that you can rely on, but at the same time, 90% of those listings are being received in a way that they are being updated at least every 15 minutes. So I don't know if your listeners have seen like our Doghouse Architect ad or some of the new campaigns. We're really trying to focus on what an impact it has on the consumer to be able to understand exactly what homes are on the market and be alerted when they come on the market to be able to act upon them and find a realtor who can help them out from that perspective. And you'd also find that the vast majority of our listings are as deep as you can make them in terms of the most pictures, the most descriptions, all of the key data points that are very important for the consumers. And that's a real distinction for Realtor.com.
Well, the accuracy concern that you hear, voiced all the time by realtors, even by consumers, mostly by consumers, about bad information on the other portals, that doesn't really happen on Realtor.com. I mean, just not that frequently anyway. So the bottom line is, I hope every one of you listening understand at the end of the day, what matters is that you do support Realtor.com, and you support Realtor.com with your advertising money. You support Realtor.com by making sure you have your listings appearing accurately on Realtor.com, because truly, guys, they're the only syndicator that has our backs as an industry. They're not going to do things that are not in our best interest. They're not going to make moves that would some way possibly disintermediate agents from the real estate transaction. Again, I know this is a popular topic amongst realtors, not a popular topic amongst technologists who want everything to sort of evolve or change or go in the direction of everything basically being done on a mobile device. But the reality of it is real estate will always be a belly-to-belly transaction, and you guys matter, and listing agents obviously are the bottom line, matter most in our real estate industry. So the big topic in the economy is the recovery. According to the Realtor.com July National Housing Report Trend Report that was released August 20th, and you guys should go to their site and download that. Can you tell us about what was in the report? Give us some information that maybe surprised you from an economist perspective.
Sure. I tweeted last week, in fact, that what we're seeing is a bit of a Goldilocks market. We're seeing markets in general, and that's the ironic thing here. We talk about housing as if it's a single market, but we know it's made up of thousands of individual markets around the country. But in general, we're seeing improvement. It's improving conditions that you characterize as neither not too hot or not too cold, and hence the Goldilocks analogy. So our report for July focused on the July inventory metrics that are based on all that listings data that we sit on top of. And we basically showed that we're seeing continued growth through July. And that growth means we've had increasing volumes of inventory throughout the year, which enables, of course, more sales downstream. It's been a concern by many that part of the reasons why we've had a slight turn down in total sales this year, and in general, since the recovery began, we've been in a scenario where we haven't had appropriate inventories to be able to support the potential demand that was out there. So it's good to finally see the inventory increasing, and this is truly in a scenario, the report indicated that the growth that we have been seeing is not causing a deterioration in neither age or price, which of course can happen if you have inventory levels increasing to a degree that they're outstripping demand. So we're actually seeing the median age of homes on the market decline, and especially decline relative to last year, which is an indication that of course, demand is more than keeping up with supply, because you wouldn't have a scenario of increasing inventories plus declining age plus increasing prices unless you really had a good positive momentum. And of course, we also think that the price increases are an important continued positive psychological signal to both buyers and sellers, but at the same time, we're seeing much more moderated price increases this year versus the kinds of near double-digit increases we experienced last year.
Absolutely. So this year is different than past years because despite good gains in 2012 and 13, external forces held the recovery down, and this year's that's not the case. And I read that in your report. Can you explain that a little bit for us?
Yes, that indeed was the key message that we wanted to get across in the report, because I, in particular, have been frustrated by some of the, let's say, talking heads kind of news being reported about housing. Housing is a spectator sport, and everybody can understand and relate it. So, of course, you get the financial networks and just about anybody in the country talking about it. But ironically, most of those people talking about it don't have access to the kind of data that your listeners have in front of them about their individual markets and, of course, what we sit on top of. So I consider it part of my mission to help fix some of those issues. And what's been frustrating to me is that I am seeing this year gain momentum as the year progressed versus the exact opposite experience that we've had over the last several years, or indeed since the recovery began. So in 2012 and 2013, we had a scenario where the year started off extremely strong. Everybody was optimistic and excited about what was going to happen. But for multiple reasons, by the time we got to this point in the year, actually, by the time, in most cases, that we got to the month of June, we started to see very strong signals that we were losing momentum by mid-year, but not this year. So just to think back in time and everybody try to put their time machine on and remember what 2012 was like. 2012 was we were experiencing a disappointing U.S. economy, so you had some really worry about the jobs market not picking up, and at the same time, if you recall the acronym, PIGS, standing for Portugal, Italy, Greece, and Spain were really taking the headlines because of pending debt defaults and that sort of thing. And then we had our own political issues going on regarding debt ceiling. So all those things just kind of cast a wet blanket over how the consumers were feeling. And then in 2013, it was our domestic fear of the taper and related rising interest rates we were experiencing, Middle East unrest, and, of course, the government shutdown. And in all cases, we saw that consumers lost confidence. I mean, the Consumer Confidence Index reflected that. But this year is truly different. We've seen the exact opposite. We've seen sales increase this summer in existing home sales reported by the National Association of Realtors. We're seeing, as I mentioned, our inventory metrics do nothing but improve month to month and year over year. And then yesterday's Consumer Confidence Index for August registered 92.4, which is the highest number we've seen since October of 2007. And then when you look at like the web traffic and the people that are visiting not just Realtor.com, but looking at real estate on any site or mobile devices, and we've seen traffic continue to grow into June, into July. Page views are up, unique visitors are up, all across the board. If anything, I think consumers are feeling more positive and more confident and more interested in housing.
Yeah, well, I 100% concur with the fact that this is the first year in many years where there hasn't been headwinds starting mid-year. And I remember very clearly what you're talking about. It's like June or July, all of a sudden the brakes get put on, and then basically the energy gets sucked out of the market, and then everyone starts feeling optimistic again going into January, and that cycle was just going back and forth, back and forth. It felt like for like the past 5 or 7 years. And you're right. Now the energy that's in the marketplace and the feedback we're getting from these agents, I mean, it's really exciting. It feels like, in what I think it is the beginning stages of a 7 to 10 year good old-fashioned real estate boom that hopefully won't end in disaster. So do you black swan events aside, do you see any potential problems that would slow down the housing recovery or even reverse it? Do you see anything that's happening that would cause you to cast a worry?
No, not. I mean, I'll answer that very simply by saying no. We really have a scenario that things are starting to fall in line. You've had 7 months in a row of more than 200,000. We've averaged, I think it's 233,000 new jobs a month for the last 6 months. That's really the main strongly correlated metric to the consumer confidence number that I mentioned earlier. And we're seeing slight upticks in things like wages and income, and in particular, we're starting to see slight upticks that would indicate that the first-time buyer segment is starting to come back. So if you think about our housing world as this big, complex ecosystem, because it really is, if you try to kind of think about the way people talk about the climate or things like that and how we're all interconnected, we've had a scenario that we've been seeing improvement since the bottom of the market in 2011, but it hasn't been entirely healthy. Like, we had wonderful volumes in 2013, but an enormous part of that volume was distress and foreclosure sales, and those were not the kinds of normal, healthy transactions that we would want to see a lot of, and that has been worked off largely. We're now finally seeing percentages that are at lower levels, getting very close to what you could describe as normal levels of distress. And in some places in the country, like your new hometown in Austin, that's absolutely the case. There's no distress really to speak of. And so all of those things point us into a scenario that we're just getting healthier and better. And so you're starting to get normal market fundamentals, people, life dictating housing. And we're back in the scenario that you can make sense of sales and prices based on supply and demand. So I do think we're at the beginning of a long cycle. It's going to be, I don't think we're going to see, like all of the pent-up demand, all the people who haven't been able to buy, or have been shut out of the first-time market segment, for example, rush in and buy homes over the next 6 months. It's probably going to take us the better part of a few years to really work off all of that pent-up demand, because you still have some issues, particularly in the first-time home buyer segment, with mortgage finance and qualification and some of the difficulties there that are limiting what we can do. But once that really starts to be vibrant, I think we're going to be riding a very large demographic wave of the baby boomers moving into retirement and making decisions about their next home, and the millennials finally forming households and buying their first homes that I think will make for some really good years for real estate.
Well, I agree completely. And, the housing trends also go to the different styles of housing and all that. Yeah, it's fun having a conversation like this with someone like you, because for the first time in a long time, we don't have to talk about all the doom and gloom stuff that seemed to overshadow our industry for almost a decade. So, I'm sure you feel excited about it as well. But speaking of headwinds, potential headwinds, you mentioned obviously financing is still trying to work its what's going to happen with first-time buyers, or the mortgage products are going to start becoming more diverse again. Not high-risk listeners. We're talking about just basically making it easier to obtain a mortgage. Another interesting conversation that's happening amongst economists, and I read this all the time, inflation, right? So all this massive amount of dollar printing, you're an economist, hypothetically that's going to have to come home to roost at some point. There's going to hypothetically be a time when the Fed will raise interest rates to slow the, all that good stuff. What do you anticipate that happening, and what effect, to help our listeners understand the effect of inflation on home, I hesitate to say values, but the cost of real estate?
Sure. So, yes, if you purely look at some of the monetary policies that we've been living under that have been, quote-unquote, printing lots of paper to keep the economy moving, you would have thought, and many people did think, that we would have experienced substantial inflation by now. But all of the key metrics to measure inflation, the CPI without food and energy in it, individual personal consumption expenditure indices, they all really indicate that we've been under. If anything, we've had a risk of deflation, and a deflationary cycle is actually a much worse scenario to have to go through. So the Feds had their challenges trying to accomplish this, and of course there's always people that are going to criticize what they do. But the reality is they do seem to have pulled off quite a bit of an easier landing, I think, from the scenario we were in 7 years ago, six and 7 years ago. But one thing is definitely for certain for the future. We are likely to flirt with higher levels of inflation than we've had in the past. I think most every economist is forecasting that inflation will start to be more significant than we've experienced, and that'll be above the 2% rate that we've had before. But I don't think there's anybody that's mainstream that really thinks that we're going to have double-digit inflationary issues like we saw at the like the latter end of the 70s and into the early 80s. In general, real estate is actually physical assets are benefit more in inflationary times because people gravitate towards those investments to actually help reduce the risk and improve the return that they have on their money. And so real estate, from a pricing perspective, tends to do fine in inflationary environments. The problem is when the Fed starts to worry more about inflation, that's when we'll see interest rates increase. We've been living through a very abnormal time of the lowest interest rates we've ever seen, largely because the federal funds rate has been zero, or essentially zero, for the last several years, and then the quantitative easing on top of it have tried to push rates down in mortgage and other credit markets to as low as we will likely ever see. Ironically, though, we set the actual lows in mortgage rates in some mortgages like ARMs just last week. So it's not been a scenario of mortgage rates going up already. But I think it is very safe to say that at some point, is it a year from now? Most people are betting middle to second half of next year will be when the Fed starts to raise rates and raise the federal funds rate. You'll probably see the scenario that we saw unfold last year with people fearing that rate actually raising the mortgage rates in advance. So I think most economists are somewhere in the range of forecasting that we're going to have between 50 and 100 basis points rise towards the end of this year into the first half of next year. So that would mean we're probably talking about near 5% for the 30-year fixed rate sometime over the next 12 months. And that will be an important signal, I think. That's the kind of final signal to the consumer that the two things they can bet on, and it truly is more of a recognition of more normal circumstances, that next year, whatever time frame this might be, whether it's tomorrow or 6 months from now, but in a year's time, you can bet that prices and interest rates are going to be higher than they are today. And I think that just encourages the psychology of buying if it makes sense to buy today.
Right, and I have Bloomberg on pretty much all day in the background while I'm doing stuff, and it's interesting. There was one of these hedge fund guys who's been buying up houses. Don't remember his name all of a sudden, but in any event, he was talking about the fact that he's encouraging everyone to buy real estate because of the fact that if inflation does kick in, well, he said first of all, lock in long-term these really long-term low interest rates, lock a 30-year loan in at the lowest rate you can get, because he was saying, in essence, when the inflation starts kicking in, depending on how big of a number it is, that we could be seeing essentially people having their houses essentially paid. The interest rate is negated by the fact the house is increasing in value every year because of the inflation rate. So I don't know what the other side of that is. I mean, I wasn't really paying much attention in the late 70s. I was a kid then, but I don't know so
Me
what
too.
the other side of that is. Right. So I don't know how all that comes unraveled, but at the end of the day, yeah, I mean, you guys, this stuff is important because when you're talking with gun-shy buyers, and I know a lot of you have been dealing with that, a lot of fence-sitting buyers anticipating more inventory, lower rates and whatnot, you've got to really be educated on what information to give them and how to explain it. So you need to go back and listen to what Jonathan said and how he explained it, because he explained some really complex ideas brilliantly. And take this information. Well, here's another idea. Share this interview with all your clients. Put it on your blog. Put it on your website. Use this as your opportunity to educate your potential buyers and sellers, letting them know that, I mean, Jonathan, I don't think there's any question. You know, people in our industry always say this, but it's never been more true that really, realistically, in the next 18 to 24 months, there may not be another better time to buy a house because of the interest rates and the other things we're talking about. I mean, people could really position themselves perfectly to invest in a home. I mean, aside from any black swan events, I can't really find any arguments against that. Can you?
Oh, totally agree. It's that that exogenous event, as economists would say, that you can speculate and fear about. But this is not a scenario where there's any question that there is a falling knife. The kind of scene where people advise you to sit back and to see when prices settle. We've had several years in a row of price increases. Almost all people are forecasting above historical levels of price increases, but more moderate than we saw last year. And in fact, if you look back, and even if you'd bought in 2009, 2010, and 11, most likely if you'd bought in those years, you would have already, by price perspective, done well. So it goes back to the power of your listeners, of the individual realtors and agents, that you're in a scenario that you're in the best position to talk to them. And maybe, Tim, you and I can come up with a way to do this more regularly and give them talking points that help to make sense out of the broader market. But once you get past those concerns about the broader market and making sense of what's gone on Bloomberg today or CNBC, then it all boils down to making those decisions and looking at the supply that's available at a local level and getting the counsel of a realtor to know if this makes sense for you individually in the neighborhood that you want.
Well, I'm certainly down for that, John. I mean, anytime you want to do it once a month or once a quarter, let's schedule it now.
I think it's a great idea, honestly. It would force a rhythm, and people could depend on getting some good talking points, and maybe you and I could figure out a good way to make it entertaining.
Yeah, well, I don't know about the entertaining aspect of it. I think I'd have to count on you for that. But, yeah, I'd love that. I mean, personally, I find this stuff really fascinating because these numbers, these sort of big things that we're talking about, they have such a Main Street implication. And when agents have information, they have confidence. And when they have confidence, they're able to go out and be of service to more folks. And that's, at the end of the day, what the real estate industry is all about. I mean, we always, the industry is so obsessed with lead generation and customer service and CRMs and all these wonderful products that help to make our real estate businesses run more efficiently. But at the end of the day, what this business, what this industry truly is about is being of service to other people. And I can't think, aside from maybe being like a doctor or something where you're saving people's lives, I can't think of anything that's more profound that you could help someone with than a real estate transaction. And I mean that with 100% sincerity, because you're helping somebody accomplish a goal or solve a problem, depending on the nature of the sale. You know, you're helping somebody find a home. What's more important in life than home and health? And, you know, this is the essence of what the American dream is all about. And this conversation, even though I know some of the listeners are kind of like, you know, going glassy-eyed listening to what we're talking about, guys, take on the challenge of understanding at least how to explain the macro trends in the economy and how they directly affect your individual buyers or sellers. It matters. It will make you stand out in their eyes that you at least took the time to, maybe if all you do is share this radio show with your potential clients, or go back and listen to the points that we talked about and jot some points down so you can talk with folks and let them understand, you know, that you know what they're thinking about. You know how much information they're getting from CNN. I mean, how many different websites do people visit nowadays? And so you have one set of websites that are giving you, you know, oh my gosh, there's going to be runaway inflation and 20%, and we're all going to be living in caves, and we're all going to be trading, you know, beads with Indians again. And then you have, then you have people that actually are looking at the facts and paying attention to the trends that aren't trying to sell you gold on, you know, so guys, really take the time to educate yourself so you can provide a higher level of service to your customers. And by the way, when you, again, have that confidence, you will find yourself attracting more customers to you. So, Jonathan Smoke, I absolutely accept your offer to be a regular contributor and, you know, a regular co-host. And if you want to do it monthly or quarterly. It's completely up to you. I mean, we can talk about that after today's show. Anything else you'd like to say to our listeners? And remember that probably something like between live and replay, there'll be something like 50,000 agents listening to this. Anything else you'd like to share with them? No, I'm not trying to make you nervous. Well, kind of I am, just for fun.
Well, I would reinforce a point that I think I subtly made before, but I really want to make it stick. There's a lot of noise out there. Real estate is truly one of our country in particular's favorite spectator sports. So there's lots of opinions, and exactly what Tim just said, there's a lot of agendas behind the opinions that are being expressed. And 9 times out of 10, those opinions are being based upon data that's far actually inferior to the very data that you have in front of you and that you've invested your career and education and becoming a realtor to be able to have access to and to be able to interpret. I just have the luxury of sitting on top of it and being a consumer of not just Realtor.com and Moves data, but also every other possible source from the government and from other parties that help us understand what the consumers are doing and truly understand that I couldn't agree more with what Tim said about people caring about this. Tim, I pulled together an interesting calculation just the other day related to another media request. Millennials are a hot topic today. I pulled the numbers for the month of July in terms of what ComScore reports that millennials, people that, and in this case I narrowed it down to just the millennials that are aged 21 to 34. So the adults that are potentially in the realm of potentially buying a home or renting even for that matter. And I found this startling conclusion. Half of all the millennials, half of all of the adults aged 21 to 34 in the U.S. visited a real estate website or mobile application in the month of July.
That is insane.
So, yes, they care about it deeply. Maybe they're having difficulty. One of the things that we know from our surveys is that they are very anxious about the process. They don't understand it. They don't understand the news. And what I'm going to be doing is creating the bully pulpit for talking about what's really going on with the best data that we can amass. But I'm always going to be directing them to the realtors to find out what's happening locally. So you guys need to be prepared to be able to talk about that.
Well, so I'll be on the pulpit with you, or at least hold the box for you while you're on there. But I'm going to drill down on something you just said because it's really critical that these guys understand that you heard what Jonathan just said. He is going to be sending folks back to agents, to realtors. See, guys, Move.com, Realtor.com, supporting our industry. Got to really question where you're spending your money because you're either spending your money with a company that is supporting our industry or it is not. And clearly, our friends at Move.com and certainly Realtor.com and obviously National Association of Realtors.com are supporting our industry. They're the backbone of our industry. So, guys, do take the opportunity to understand more about the products that they have on offer. And, Jonathan Smoke, I really sincerely want to thank you for your time today. I've enjoyed this immensely, and I look forward to our repeat performances here as frequently as you will allow.
Me too, Tim. And I actually look forward to visiting you in Austin and maybe checking out a Longhorn game while I'm there.
Well, yeah, that's perfect. We'll do it. All right. Thank you, Jonathan. I really appreciate your time. And listeners, again, what's your homework from every radio show? That's right. Share this show. Share today's radio show with as many other agents as you possibly can. Post it on Facebook, tweet it, do whatever it takes. Help us get the word out that we are indeed in the very beginning stages of a 7 to 10 year real estate boom. And you, as an agent, have to embrace that so you can be of service to others. And by the way, help yourself out financially and build your business as well. Jonathan Smoke, thank you very much. Everyone else, thank you for listening, and we'll talk with you tomorrow.